Ladies and gentlemen of the crypto space, we're live on a Wednesday at 12:26 p.m. Late to the stream. I got a bunch of other things going on, and it's driving me nuts, to be honest. Isn't it frustrating when the real world gets in the way of these wonderful endeavors and activities that we much enjoy, and the opportunity that's available to us in the crypto space, and the real world, the pesky real world, gets in our way. So we got a hot topic today. The market's on fire. The macro market took a fat dip yesterday, and after hours, S&P futures just ripped past the 100 SMA. It was like on the 4 hour to the upside, and I was like, "Whoa! It does not want to go down." And this is exactly why I look at M1 denominated charts. It changes the whole paradigm and perspective on the way really we need to look at dollar denominated indexes. And I just, unless the system implodes, I mean, literally implodes where the IMF has to step in. We're talking about, 2 to 3 multiple. We're going to talk about multiples on the major equities indexes, and dare we bring up the Bitcoin denominated in M1? We haven't even broken out of 2019 highs. We haven't broken out. Denominated in M1 and 2017 highs. Woo! Bitcoin's going to be at 100 grand, and we're barely going to be at 2017 highs. So the M1 chart really changes everything. Anyway, we're going to talk about a little bit of Doge today, monetary policy, and obviously this has overlap into every other asset in the crypto space, and that's pretty much the foundation for my narratives and the stories that I tell, monetary policy. How else are we going to understand these assets, these currencies, which I call them, and I'd say they're digital fiat currencies in many regards, fiat relative to like a sovereign, but I think it's applicable as well. These are assets that are relative to a DAO, an organization. So maybe fiat isn't the best way to describe them, but currencies sure are, because currencies, and particularly money, have certain properties: inflation, deflation, and have a capacity to possess velocity, the velocity of money, the circulation of money, the capacity to collateralize an asset, access its equity, take on a debt position, and that's where value is created, especially considering double entry accounting, where the bank contains a debt, has a debt position on its books, and the borrower has a liability. So there's now more money in the system, so to speak, and that's exactly how debt increases money supply. And I would argue that's exactly what's playing out in the crypto space, and why I'm focused on blockchain networks that have nascent monetary systems emergent, where velocity is reaching critical mass, and we have precedents. We had BSC, and now we have Polygon. So that's pretty much what I'm looking at. Let's go over to Dodge, but this thing's about to rip, in my opinion. So it's quite nice. It's riding the 200 EMA on a relatively short time frame, and it's towards the upper resistance of pretty nice. It was a descending channel. Anyway, I digress. I digress. Today's topic: Dogeopolis and how monetary policy works psychologically. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Oh, I was talking about this chart and I didn't have the main screen up. Getting ahead of myself today. All right, let's take a step back and see who's on. Alex is in the house. Always a pleasure. B. Smith. Sup, Noah, long-time listener, first-time messenger. It's all good. Welcome from across the pond. Always a pleasure. James in the house. Montana. Doge is literally unstoppable. Yeah. So I got Matic up, but let's pull up Doge. So you have fundamentals, which are the monetary policy characteristics, which I talk about, but fundamentals tell you where to look and technicals tell you when. Fundamentals mean for this asset, I would never touch it. It's of no interest. To top it all off, what are we on the 5 min? Look at this horrible bearish divergence on the MFI, bearish divergence on the MACD, bearish divergence on the RSI. Yeah, this thing's going in one direction. It's topped out on the higher time frames daily. How much higher can it go? And look at that wick. If that's not a capitulation wick, I don't know what is. All right, let's keep it going in the comments, and then I want to talk about Doge monetary policy. Doge will top out soon. It's inevitable. It's assured. It's not possible to not top out. There's 5 billion new Doge every single year that enter circulation. So for folks maybe listening on the stream that have purchased the asset and think it's going to keep going up, and you purchase 100,000, a million, or whatever, 5 billion someone just pulled out of their butt and just sold it every year. 5 billion new assets are created out of thin air and sold every year. So if you buy a million of the Doge at whatever the hell the price is at, you're talking about hundreds of thousands of dollars, and someone just printed 5 billion of them every single year. So that's real, and that's called inflation. Inflation is a critical component of a financial system, but there's a reason why DeFi has taken root. There's inflation, which is extremely valuable, that allows for an increased supply, which means more persons can have access to a quantity of the money supply. But that also causes debasement. That creates a sell pressure, a buy side and sell side imbalance. There's going to be a sell side imbalance because someone who just mined 50 million Doge for 10 cents, 15 cents, they're going to sell it, and they're going to sell it for 60 cents or whatever the hell it's at right now. And that's exactly why there's a depreciative pressure no matter what on the asset, because people are mining for a fraction of the cost of the asset. Serious. If I got computers in my back room and I flip on Doge and I mine 10,000 Doge today for $1 and I could sell it for $5,000, of course I'm going to sell the asset. Especially when the chart looks like it does right now. This thing's going to be down 20, 30, 40% by the end of the day. Maybe not 40, 20, 30%. There's still a lot of um, emotion going on with the general public, thinking it just keeps going up. This happened 2 times in history. Obviously, the 2014 cycle, the 2017 cycle, and now 2021. And this is what happens. We know what's going to happen. It's an inflationary asset. Anytime you debase a currency to the degree, an extraordinary degree. I mean, Doge is just extraordinarily inflationary to a level that is non-sustainable for a currency. It's a currency. It just has a horrible monetary policy. There's no deflationary pressure. So bear in mind that's where Flare comes in, and that has my eye even on a lot of these UTXO assets that have horrible monetary policies, because Flare has a capacity to facilitate equity access, and that is a deflationary pressure. If someone could hold an asset and access the equity stored in it, they probably don't want to sell the asset. So that encourages persons to not liquidate. Albeit the increase in inflation, that's going to be this can be a volatile asset for a long time until there's no longer opportunity cost selling it. So if it becomes better to actually hold it, even though the supply is increasing so much, people will hold it. And until that day, people are going to sell the coins that they mine. And that's the way it works. I got a lot of people in the stream. Let's say some hellos and keep it going. Michael Doge will top out soon. Well, we'll see. I mean, it looks like it already did. And we got a lot of bearish divergences across all the time frames, including longer time horizons. I mean, this MFI looks like it's going straight down. Notice though, on the 1 hour, it bottomed out on the bottom of the guppy, so it does have support. There's persons defending the price action, which is interesting. Now, bear in mind, check this out. So if you want to understand technicals, this is a previous resistance. So it ripped through previous resistance up to about 70 cents, and now it fell down, and now is trying to retest previous resistance, and it's encountering resistance. So this looks like a blow off top and a previous resistance holding as resistance. This is a dangerous position to be in because obviously a mean regression, even on the 1 hour chart, is at 45 cents, which is a 25% decline. I would not be surprised to see a 25% decline today based on the technicals, particularly if this line does not get breached to the upside. If this line does not get breached to the upside, that is a technical indicator that algo traders will use to liquidate the asset. And no, because it says that the prevailing market participants don't have enough force and enough encouragement behind them to keep the price going up. And if a price isn't going up, it's going down. If an asset isn't bullish, it's bearish. And when this thing liquidates, it's going to liquidate to a mean regression. I'm a mean reversionist. I believe in it. Everything tries to restore a state of homeostasis, and the first stop for the mean is 45 cents, and then the 200 EMA in the 1 hour is 41 cents, and there we go out to the 4 hour. Oh, goodness gracious! So there's a ways to go probably to get to the 4 hour time frame, but you're talking about 30 cents. Yeah, 26 cents for a 200 EMA. So the big mean regression is the 200 EMA, um, which applies additional consideration to more recent time frames. The 200 SMA is more broadly spaced out amongst all time frames. So it's harder to hit, but the 200 EMA is a nice target for mean regression. And a mean regression in the 4 hours is going to take us to 26 cents. You're talking about like a 60% dip in price. Whether that's today or not, I have no idea. First stop is the 100 SMA, so I say about 30, 40 cents sometime today. That's the way it works. Winter in trading, always a pleasure. D-Gen, True Alpha, Big Brain, and great individual. Thank you kindly. I wish I could do more. This is going to be very painful for a lot of folks. It might go up, great, but it will come down. It's not technologically possible. It's not mathematically possible. The monetary policy is designed to put depreciative pressure on the asset. Uh, Whether that was intentional or not, it's irrelevant. That's what monetary debasement does. When the Uni 3.3 unleashed, how we find it, probably on Uniswap, but if it's not out already, I've been swamped this morning. I haven't had a chance to check, but last I saw, they pushed the mainnet contracts, and folks have started integrating, and we're talking about vaults and NFT management and the entire narrative we've been talking about for pretty much the last like 3 4 weeks, a solid month at this point. And that's all going to start playing out. It takes time. It takes time for things to play out. Weight Mappers in the house, always a pleasure. Curve or FTM network, should we go play with that? Yes, both of them. Well, Curve on FTM. Curve has been on FTM Phantom since prior to Matic, but Phantom does not have critical mass liquidity. Aave is what achieved critical mass liquidity for Polygon. Um, so, if you talk, I talk about these networks as if they were monetary systems, just like the real world economy. And until you have a significant amount of liquidity, you're not going to get the developers, and the developers create the velocity because they trigger the emotions of persons to participate seeking opportunity. And that's what's happening on Polygon. So Phantom is on my list. Solana's on my list. Um, there's a lot on the list. Avalanche is on the list. Um, Elrond. But until you have that critical mass liquidity, it's not something I look at. So that's why Polygon is basically what I'm focused on for the time being. Critical mass liquidity has been reached, triggering the developer frenzy. The developer frenzy will trigger the emotions of market participants to seek out opportunity, and that will start to generate monetary velocity. And then you have the self-sustaining feedback loop, which is exactly what's about to play out in the regular economy now that we're seeing some activity post-pandemic. Sonny's in the house. What's up? Welcome. First time. Welcome. Doge just took a huge fake out shit in the woods. I mean, that's a hell of a dip. It's not that large relative to how far it's run up, as you could see. On the 1 hour, it hit the bottom of the guppies, which is cool. But guess where it topped out? It topped out at a previous resistance. If that's not bearish, I don't know what is. That means it no longer has enough pressure to keep going up. For this to look to regain bullish sentiment, it would need to push up and print a new higher high. We're talking about 72, 73, 75. If it does that, fine, great. Technicals tell you when to look. Fundamentals tell us to never look at this. But if you're an opportunist and a capitalist, you could take people's money. The way this works as a means of taking people's money legitimately is if you knew early, you will be taking the money of people that found out later, because you're in here, you sell up here, they bought your asset up here, they found out later. You're going to take their money. And that's okay. And that's the way all of crypto works and all of equities markets. That's the way trading works. It's transfer of value from people that found out late to people who found out early, which is really a transfer of value from the majority to the few. So it's a concentrator of wealth. Interestingly, this is one heck of a candle. 17 minutes for the hourly close. Was it some sort of doji? Was it a dragonfly or a hammer candle? Dare this break out and be like a bullish engulfing candle. Oh, where's JT? He must be freaking out if he ever looks at the Doge chart. Let's keep it going. SNL will be top. I wouldn't want to wait or find out. I just have no interest, my friend. Squanchy's in the house. Always a pleasure. I'm grateful for the community you have put together. Thank you, Squanchy. Yeah, Squanchy's a good friend, passed in a tragic accident. I lost my mother last week. That's why I've been a little distracted mentally. So I know how much it hurts, and life is strange. Life is strange, but we proceed to the best of our abilities, no matter what, because life is about purpose, and I find good purpose in trying to help folks not buy Doge. No incentivized FTM yield. So that's why there's no monetary velocity. That's why you see the transaction volume very low. That's why you see the liquidity very low. There's no incentive systems. There's no positive engagement feedback loops. There's no churn. There's no positive churn of the capital that are on the network. So it does not have critical mass, network effect, liquidity, and there's not even a cent monetary velocity at this point. That's spot on, and that's not the case for Polygon. Polygon is eating into Binance Smart Chain. There's $3.64 billion worth of capital on the platform. Aave and Curve are both incentivized, so that and DeFi platforms are sprouting left and right. There's an immense amount of nascent capital churn. And I think they'll continue to eat on into BSC because Binance Smart Chain is extremely expensive compared to Polygon. It's expensive. You're talking about dollars for a transaction, whereas Polygon is a fraction of a penny. Trevor's in the house. Always a pleasure. Igor, maybe Doge is invented so people will finally understand inflation. Folks are thinking that it's a big deal what the asset is doing, but I see it as a tragedy because people are going to lose a lot of money. It's going to be a big transfer of wealth, but it's a transfer of wealth from the many to the few. And the few, more often than not, happen to be whales that already have a lot of wealth. I mean, look at this shit. It's already pushing up against BSC, BNB. That's crazy. Anyway. Thoughts on Hoge, not Doge. No idea, my friend, but Hoge sounds good. It sounds like a sandwich. Like a sandwich right about now. Noah, tell us about stagnant equity. So that's exactly what Doge is, and frankly, a lot of assets. If you can't collateralize an asset, what's the point of holding it? Collateralization of an asset creates a deflationary pressure, as I was describing earlier. A person holds an asset, just like I described Bitcoin. I don't give a shit whether it goes up or down in value. Up or down in value. What I care about is how many dollars I could borrow against it. If it goes up in value, I could borrow more dollars. Therefore, I can make more profit by putting those dollars to work. If it goes down in value, if it goes down enough, I have to pay back some of the dollars to keep my debt position from getting margin called. So that means I have less dollars to work with. So you borrow, you keep it in dollars, you protect the principal of your borrowed value, and then you're okay. So you could borrow and leverage, and you don't have to take excessive risk. But the whole point is Bitcoin is not stagnant equity. You can collateralize it, and this is a foundation of the financial system, and it's basically how bonds work. Um, Collateralize it and you borrow against it. So you can't do shit with Doge. You literally can't do anything. And I avoid assets that are stagnant equity. Um, XRP is stagnant equity. Cardano is stagnant equity. I mean, a lot of assets are stagnant equity, even like Polkadot is stagnant equity, but it's also in the Cent financial system, so you can't speculate that it's getting close. And the same with Cardano. It's potentially going to have smart contracts sometime in the next 1,000 years, and then you could potentially collateralize it. So before leveraging heavy into a position like a risk-on play, um, you want to make sure that there's a financial system, that there's an actual reason that the asset is going to go up in price, that there's actually a deflationary pressure to prevent excessive debasement. Both Cardano and Polkadot are inflationary; they're proof of stake. So not excessively inflationary as compared to Doge. Basically 0% inflation compared to Doge. Doge is inflated. Might as well be Zimbabwe or Argentina at this point. It's just hyperinflationary. Um, so stagnant equity is a characteristic of an asset to avoid, in my opinion. So I hold Polkadot and just I don't hold a large amount. It's a small amount because I know that it's going to be extremely volatile, as there's currently no reason to hold it except it was nominated to a validator so you could get inflationary generated returns on your principal. It's inflation, so you need to nominate to a validator to compensate for the inflation that the system creates. But Matic's a big deal. It's no longer. You could literally put Matic into Aave and borrow against it. It was stagnant equity 2 weeks ago, but it changed. The narrative changed, and that means that's a big deal. That's not a trivial difference in the story that's told about in the Cent financial system. So unless you're looking at these platforms like financial markets, financial systems, you're missing the biggest innovation of the DeFi space. Sarah Blocker, thank you very much. I appreciate. Yeah, that ARC meme that folks made was wonderful. I got to throw some memes up on Twitter when I get some time in a little bit. Oh, Oh, there's so many comments. Oh shit, I'm doxxed. What's up? Heirloom in the house. Always a pleasure. Quantify 53 in the stream, 19 likes. We can do better. Sonny's in the house. You're very welcome. Freaky Flow. Elon doesn't care about fundamentals. He cares about being in the history books. Elon's cool. If I was the richest person on the planet, I wouldn't give a shit either. He's brilliant. He's an engineer, and he wants to change things. So I appreciate what he does, and um, I don't think he's probably not thinking about the implications of his verbiage, and that's okay. And in the end, it's everyone's responsibility and how they allocate value. And there's a lot of opportunity with Doge, and a lot of people will make money, but it's mathematically assured that the vast majority are going to lose their money. Their money will be taken, and that's the way capital markets work. So I don't judge him. Um, and I feel empathy for persons that are participating in this particular asset, because they don't know any better, and they think it's financial desperation. Everyone is tired of the old ways of doing things, and I know things are changing, and work from home. I haven't worked in an office in 2 years. Um, but there's something off about the way society is constructed, and it leads people to do desperate things, and like taking a good portion of your life savings or whatever you have available and throwing it into horrible asset with devastating monetary policy and extreme inflation. People are going to get hurt. So I don't really mind what he's doing. I feel empathy for people that are susceptible to it, and that's just because they don't have financial education. I was never educated in a financial institution or an institution about financials, um, but these things are things you learn. Or just realvision.com. Listen to Raul. Listen to brilliant people. Watch George Gammon on YouTube. He's great. And he really breaks it down nice and simple and has a huge amount of content. You get technical, you go to Lynn Alden. She talks about history. If you want to understand contrarian ideology, you're talking about Stephen Van Meter, Jeff Schneider, and Brent Johnson. If you want an absolute brilliant guy and wonderful speaker, that's Santiago Velez, and he pretty much understands everything. Wonderful mind. So we have to do better. And that's the whole point of this stream, and that's the whole point of the forum, and that's the whole point of really what I'm trying to create momentum with is um, it's not financial desperation. You don't have to be desperate to break free, but you really need to try and at least do better, which means self-education. Um, is that an autodidact? Is that what it is? Is that an autodidact? Self-teacher, self-taught person, an autodidact. I'm the epitome of an autodidact. I mean, almost everything I do professionally, I was never educated to do. Squanchy, God bless you. No, I had no idea you lost your mom. She raised the legend. Mom never knew what I did. Mom was on a different plane of existence, and she never really knew what I did. My father would have, he's gone as well, would have loved um, what I'm doing nowadays. My grandmother would say, "Oh, Noah, it's so wonderful." I miss Grandma. She was 95. Winner in trading, DeGen, thank you very much. I appreciate it. Sonny, condolences. Thank you. BLCK, Blexer. Unrelated, but two questions. Any book recommendations on monetary policies and velocity? What do you think about the push for green Bitcoin? Are they mined by sustainable resources? Yeah, that's cool. There's no problem with regard to the energy required to create Bitcoin. Problem is, where are you going to get the energy from? So start making clean energy. I don't think Bitcoin needs to change, and it should be allowed to persist in its current form with minor iterations, soft fork upgrades over the years for iterative improvements. But just folks need to start using solar, and they will because they will. And that's the problem. It's not about the energy consumed; it's the source of the energy. People say Bitcoin's a problem for energy consumption. Yeah, start using some freaking clean energy. Simple. Thank you, Brendan. I appreciate it. Quantified. Sorry to hear about mom. I'm sure she was immensely proud to raise a son who cares for the well-being of strangers. Thank you, Quantified. I appreciate it. I really do. Squanchy, yes, I have the same question as Blixer. Book-wise, realvision.com. Brilliant people, and it's costly for the expensive package. It's up here upwards of $1,000 a year. But it's brilliant, brilliant people. And to understand the crypto space, you need to understand the legacy financial system. You have to understand the macroeconomy. You have to understand how the Federal Reserve operates, how central banks operate. You have to understand what the IMF is doing and how the IMF crafted the global monetary system in Bretton Woods and the beginning of the first half of the 20th century, and why that's going to change. And Raul talks about these topics, and George Gammon likes to talk about um, what the IMF is up to. His content is great. A lot of content on YouTube. So it's between YouTube and Real Vision will change everything on how you look at these markets. And crypto markets are financial markets, maybe even more so financial markets than equities markets. You're talking about digital currencies in so many regards. It's remarkable and it's stark. Brady's in the house. Always a pleasure. Rupert, what's up, Noah? Thank you very much. I appreciate it. Gavortex, Hearts. Sunny, is ETH a deflationary asset? No, but it will be. And that's what has everyone so excited. EIP 1559 will create a deflationary pressure on it. And it will be net deflationary. More will be burned, people are arguing, than created by the mining process. So that is extraordinary. The monetary policy that is expected of the Ethereum asset. Um, a deflationary asset that has critical mass network effect, has a capacity to be collateralized, it's going to significantly increase in value. Um, Zach says, have you looked into White? You can buy ETH or BTC along with a money put option. Oh, that's cool. Well, a put is cool, and that's what Japan does. They literally, like Japan's banks, they give you money because they basically sell puts for you. And so, was it called the Japanese put or something? I forget, but something I've learned over the years, and that's something they do over there. And it's basically a constant revenue stream by the system selling puts. GN, what's up with Uni 3? I don't know right now. I haven't had time to dig into the markets, but today's a big day. Uni V3 really changes the entire structure of Ethereum L1 DeFi. It's going to push developers in a very different direction. It's going to spur new projects, new software. It's going to change market behavior, and we'll see how it unfolds. Ben, nice to hear some compassion and empathy for a change. Now, well, if you're on the stream, it's always compassion and empathy. That's why I do the stream. It's not about making as much money as possible. This is really about what's innovative of DeFi, and it's a capacity to save money and not be fucked over by the debasement of the currency. I mean, as of last year, you probably need about 15% interest on your dollars per year. Otherwise, you're literally doing nothing and you're losing money. As per the Chapwood Index 2019, it was about 8 to 12% per year, and then they went ahead and debased the currency 25% in a single calendar year. So I would say 15 to 25% you need to outperform in order to not get fucked over by the Federal Reserve, and that's real. 15 to 25%. You got $1 million in the bank, you literally have like $850,000 or less next year. And I often talk about the fallacy of your bank account number. People see it as a fixed value, but in reality, it's going up and down. It moves because you don't give a shit how many dollars you have. What you care about is how the purchasing value, the purchasing power, the value of the dollar, and the value of the dollar is just constantly going down. So literally, your bank account is constantly going down. So they lie to you by showing you the number. What you really care about is the value, which is constantly decreasing. Visor rising up to test all-time high, looking juicy. Well, Quantify, we've been in Visor for weeks at this point. That's a good deal. I think there's much speculative potential. I have a position in all four. I got a position in Visor, Method, Mist, and X Token. So risk on, max volatility, micro cap, and suitable for 0.5 to 1% of a portfolio. If you over allocate to risk on, you're jeopardizing your capital, you're taking a risk. And in order to make capital, you have to take risk. If you take no risk, we're screwed anyway. So we want to take calculated bets based on narratives. This is something I tweeted earlier today, I think. If you can't hang your hat on a narrative, you're just gambling. And it's okay for narratives to either be proven or disproven, but the whole point is that's the whole point of a narrative. If you can't tell a story, if you can't tell an entire story about value that you've allocated and why you did it, wait, stop, and try and define a story. Because if you could tell a story, you could then either prove or disprove based on events as they unfold whether that story was correct. And if that story was incorrect, that's the exit from the asset. If the story is correct, it's quite a likelihood that it's going to keep appreciating because more and more people will see the story. And if you saw the story early enough, you're going to capitalize on the people that saw the story later. Mikaz, Noah, thanks for the content. What are your thoughts on Chris McIntosh? I do not know of the name. That does not mean much. I do not know everyone, and I definitely don't know everything. Vincent's in the house. Any thoughts on the Luna ecosystem? Anchor provides 20% interest. Sure, it's not Ethereum. The interop is questionable. Clearly, there's liquidity on Curve. Um, what I would recommend you to do is to look into the monetary network and how well it stacks up. Is there critical mass liquidity? Is there monetary velocity? If DeFi developers are not flocking to the chain, it's not of interest to me. So DeFi developers flock when there's critical mass liquidity. And DeFi developers create DeFi projects, which trigger capital inflow, further liquidification, which ultimately culminate in the emergence of monetary velocity. And once the monetary velocity kicks in, you're talking about the emergence of a financial system. Mickham, condolences, Noah. I've been listening to you for a few months, and I've changed your entire perspective on this market. Uh, Everyone should always be trying to achieve a better perspective on the market. If you think you understand the market, you don't. I don't understand the market, but I have methodology. I create narratives. I tell stories, and then I test those stories, which is basically the scientific method, more or less. If this and that's how you operate. So there's no way to know what an asset's going to do or what a market's going to do. So it's an ever evolving process of better. So let's be better. We can do it. Dejan, any room for some XTK discussion? Try Hopium Pump. Well, X token I've talked about extensively, and it has a longer history than any of the other assets with their ERC20 DAO wrappers, auto compounding APR into APY. And they also got the was XBNTA in the BNT pool, which is really cool. So if you have a BNT long position, it really belongs there. So that's a heck of an asset, XBNTA auto compounding Bancor. That's crazy. So that's pretty cool. Um, we'll see how those four assets, those four assets are the risk on play, trying to hit the UniV3 narrative. That's cool. Just there's more to portfolio management and money management than just watching an asset go up in price. So you need to know what to do, when to liquidate it, how to manage cash. Is your cash position deficient? Look at that, 59 cents. Let's look at Doge. All right, well, that is a heck of a doji. That's a Dragonfly doji. Now we'll see. I mean, check this out. Well, MFI in the hour is getting close to oversold. I mean, it's not close. It's in the 35s. It's in the 30s. That could be a bottom. Doge might be priming to do some serious activity. I mean, wow. Could you imagine? I mean, it is higher highs. That's crazy. So I have no interest in this asset. I don't care if it goes up because I can't hang my hat on a story or a narrative that's even remotely interesting. And that's okay. Now, if you could capitalize on it, great. If you lose money, I'm sorry. But for me, and what I tell people that listen to me is I just have no interest in it. Nothing at all interests me about it because my goal is not to make as much money as possible. My goal is to make risk adjusted returns, sustainable recurring revenue streams, and achieving a capacity to rationally manage money. And this doesn't hit any of that at all. So Powder Monkey, Chapwood Index is not up. They got pulled down last year, which begs to question why. Why would whoever pulled it down? We kind of they were providing an invaluable service because they were measuring the cost increase of goods and services, at the general public level, um, and just that's what happened. That site's gone. But we could extrapolate where we are based on data that we know existed prior to the pandemic. Zach, lots of new Sol projects popping up. Yes, indeedy. So Sol has the potential to kickstart velocity. It needs critical mass liquidity. Those bridges need to be seamless. And sure, my eyes are on. But I see opportunity cost with Sol right now. Opportunity cost means if I could get 25% of my dollars on Polygon and have zero gas fees, and Polygon potentially could go ballistic another 10 to 20x to catch up to BNB. So it could catch up to Sol. It's literally like 30% the price market cap wise of Sol. So I see opportunity cost with Sol at the moment, meaning I could do better elsewhere, and that's okay. And that's the narrative that I tell. Maybe Sol outperforms. No one ever knows what this shit's gonna do. That's why it's just risk profiles and risk adjusted returns that are really the optimal pursuit. The Jen, that's good stuff. Thank you, Noah. You're very welcome. Mr. 100 mil in TVL and 25 mil market cap. XTK is incredibly undervalued. Yeah, Lewis talks about that. That's about right. You see that. Look at those metrics. But being undervalued doesn't mean this crypto market, which is irrational, will fairly value it. But it does mean that there's a speculative play there. There's a very reasonable narrative to be told about the asset. And it's a heck of a narrative to hang your hat on, betting that UniV3 reshapes the entire L1 Ethereum DeFi space. Um, so I have my XTK position. It's not that large. I mined it all. Am I still on Ethereum? I don't hold any XTK outside of escrow at the moment. I have a fair amount, I think. It's all mined XTK at this point. Let's see. Yeah, it's like 28. Yeah, I have like 28,000. That's pretty cool. I mined XBNT. I mined XTK, Ethereum, Kyber, Aave. I mined it all. I did a bunch of mining, so I got about 28,000. That'd be nice. I wouldn't mind a 10x on this bad boy. Pretty sure the market cap's somewhere around 20 mil right now. Take us to 200 mil market cap. This turns into 200 grand worth of mining, which is pretty cool. That'd be nice. Finally caught up on the commentary. Very nice. Thoughts on Aave as an asset? Well, Aave is literally the facilitator of monetary velocity in the DeFi space. Aave and Compound. I don't know why Compound doesn't ring the same effect that I see that Aave creates. Maybe it's their social media presence, but it's a money market, and a money market facilitates collateralization, debt positions, lending, and borrowing, and that's what creates money supply increase. As I said, with the double entry bookkeeping type ideology, and I have a small Aave position. I just I see other opportunity. The interesting thing is I see more opportunity in cash. Just such an immense opportunity in cash between Bancor, just ridiculously lucrative cash positions. Curve yielding 30, 40, 50, 60% on cash. Curve on Polygon is free transactions. Ah, there's a lot of assets in the crypto space that have opportunity costs as compared to cash, which is crazy to think about. 64 people in the stream, 33 likes. We can do better. All right, let's wrap this bad boy up. Wednesday, 1:09 p.m., May 5th. Today is UniV3 day. Today is Doge. What the heck is going to happen today? Happen day. Do consider the Discord forum. Everybody that's in the stream right now is probably already subscribed, and there's almost 100 people in that forum at this point, and it's a big deal. Lots of people shooting back forth rational ideas, trying to do things better. There's no perfect way to do anything, but you need a forum. You need a group of people to be able to congregate together to discuss concepts rationally and to push each other in the right direction. So I really like that place, and I'm in there almost all day long. And just don't forget, there's always better. And we don't, even I don't understand the markets perfectly, but we have to keep trying, and we have to hang our hat on rational narratives and logic, and understand monetary policy, inflation, deflation, and velocity. And how do you spot an ascent financial system? And that's what I argue Ethereum, Binance Smart Chain, and then Polygon is. And we'll have more. And it's going to keep drawing capital in because opportunity draws in capital. So I thank everyone for joining me today. As always, tell everyone to subscribe, and I will see you tomorrow. Peace.